Gurcharan Das, could this be a problem that this supposed bounce back we are seeing is firstly somewhat statistical, secondly it's really only kind of reflected in the organized sectors of the economy. Look at what's happening with the stock markets, for example, and as Radhika pointed out, even with the corporates, it's really not to do with creating more jobs or passing, you know, the benefits down the chain. It's just by actually belt tightening, laying off people, you know, wage cuts and that kind of rationalization that they're doing so well. Could this blow up on our faces, not now, but somewhere down the line?
Well, let me say I agree with much of what has been said already. I would just say that my personal reaction when I saw these numbers was a sigh of relief, because frankly, after the tragic second wave, I had expected much worse. You know, I mean, it was human tragedy of that sort we have not witnessed since the partition. But fortunately, when you think back, it's really there were local lockdowns. There was not a national lockdown. And that explained, these sort of things explain it. So it's a question of looking at a little bit at the half full glass or a quarter full glass.
Okay.
No way can you call this a V-shaped recovery. No way can we say that we are going to achieve that 9% target. I think it's too early. It should depend on, it will depend on the third wave and what happens.
Okay.
But let me just say one thing as we go forward, because we've talked about going backwards. Now going forwards, I think Mr. Chidambaram is right in this respect, that given the fact that the consumption, you know, an economy depends on 4 pillars. One is private consumption, one is private investment, third is government investment and consumption, and fourth is exports. So we can't depend on private consumption. We are still in a pandemic. We can't depend on private investment because there's idle capacity. So the third is government spending. Now, it's absolutely right. Going forward, we have to see a much more aggressive effect of the infrastructure spending that the government has been talking about. And finally, exports, while it has done well this quarter, but the reality is the rupee is strengthened, that acts against it. And also, our companies have not joined the global supply chains, and they won't unless the tariffs come down.
Right.
So I would just say that let's be cautious about this in the future.
Okay.